Japan just did something it hasn't done in nearly 2 decades. The Bank of Japan has pushed its interest rate up to 0.5%, the highest level since 2008. And while that number might sound tiny compared to rates in the US or Europe, for Japan this is nothing short of historic. So why does it matter? And how could it reshape not just Japan but the global economy? For over 30 years, Japan has been famous for ultra-low, even negative interest rates. But under Governor Kazuo Ueda, the BOJ has already raised rates 3 times. The latest, back in January 2025, pushed the policy rate up by 25 basis points, bringing us to today's 0.5%. This may sound small, but in Japan's context, it's massive. It's a clear sign that the era of endless cheap money is coming to an end. So why the change? Inflation. Core inflation in Japan is sitting at 3.3%, well above the BOJ's 2% target. And the central bank has admitted inflation isn't going away anytime soon, revising its forecast up to 2.7% for this year. But here's the real game changer: wages. In this year's spring negotiations, Japanese workers scored the biggest pay hikes in 34 years, averaging over 5%. Of course, higher rates ripple through the economy. In Tokyo, home prices jumped over 8% year-on-year. But now, mortgage rates are creeping up too. With 70% of loans tied to floating rates, households are starting to feel the pinch. Meanwhile, in manufacturing, higher borrowing costs make investment decisions tougher. Now here's where things get global. For decades, investors have used Japan's near-zero rates for the yen carry trade, borrowing cheap yen to invest overseas. But as Japan raises rates and the US considers cuts, that trade is starting to unravel. The USD-JPY has been swinging wildly as investors unwind those positions. So where does Japan go from here? Most economists expect rates could reach around 1.25% by 2027, eventually settling near 1.75%. The BOJ is trying to move slowly and carefully, determined not to repeat past mistakes. If you're an investor, Japanese equities could become a sweet spot, especially with rising wages and stronger corporate governance. If you're a business leader, now's the time to revisit financing. Floating rate debt is getting riskier. So, Japan's tiny 0.5% rate is actually a giant shift. After decades of cheap money, the world's third largest economy is finally stepping into a new monetary era. What do you think? Is this the start of Japan's economic renaissance? Drop your thoughts in the comments and don't forget to like, subscribe, and hit that bell for more economic breakdowns.